Crypto Hotep here with another investing video. We are on week 89 of the Family Portfolio and Dividends Tracker. This may be the last, and I believe it is, it's going to be the last recording of 2025. Another year doing these tracking episodes. And I want to just say thank you. Thank you guys for um, viewing these videos, commenting, resharing, tweeting about these videos. I really appreciate it as always. And before we get into these videos, or this video, week 89, we always look back. We see what the market news is for this past short Christmas week. And Merry Christmas, Happy Holidays, Happy New Year for everyone. But it was a very short week, so not a lot happened. And before I begin, if this is your first time watching a video, feel free to go to my channel, go to week number 1 in the investing profile, and then that way you can see my whole methodology for doing these tracking videos. And basically you're following the investment journey with me and my family. We picked stocks that I shortlisted, well-known companies, well-known stock names, and we proceed to use M1 Finance as our broker of choice. And every week we look at our portfolio. We either do some buys, we have some dividend activity, some balance activity, not a lot of selling because this isn't day trading or swing trading. It's more of the investing for long term, picking quality companies and watching our portfolio grow over time, and essentially being able to generate wealth. And hopefully for my kids in the future, they can generate some sort of wealth or monetary value that they can use later on down the road as well. But by no means is this financial advice. Please do your own due diligence when researching stocks, crypto, all of those things. But with that being said, guys, this week we had a little bit of a slow week for obvious reasons. Best holiday ever, which is Christmas, was this week. And not a lot happened, but I will say this. Metals, the metal market. So when I say metals, I am referencing particularly gold, silver, platinum, palladium. Those type have been going absolutely bonkers, and normally that's not normally a good thing, right? I am invested in the silver as well. I've been invested in the silver for almost since the price was $16 to $18 an ounce. It's currently, as you can see, $70 plus, and I think right now it's at $79 an ounce, which is absolutely insane for silver. But usually that signifies that something bad is going to happen upcoming, like a recession. So just something to keep in mind here. But on the 23rd, numbers released for US GDP, and US GDP growth actually surged to 4.3%, which was a upside surprise because the growth was only slated to be around 3% or so, but it boomed up to 4.3%, which people weren't even expecting that. So that's one thing that's been great for assets alike. Okay. This past week also, I think we have a quick breakdown here. Let me check here. Yep. So current situation this week is US GDP growth is at its strongest pace since 2023. CPI inflation has unexpectedly fell to 2.7%. We covered this last week. Trump's appointing a new Fed chair who will also cut rates. That's bullish for assets. Okay, oil prices are down to the lowest level since 2021. That's crazy as well. This is correct. If you go to any gas station, gas prices are significantly lower than what they were 1 year ago. Equity ETFs have attracted a record 1.4 trillion in 2025, and then the Magnificent Seven, which are those fantastic stocks like Apple, Microsoft, Tesla, those kind of stocks, the Magnificent Seven stocks, is now their AI investment is now above 600 billion a year. Okay, so again, the GDP growth was the main number that popped out this week, and obviously, with everything going on with the new year and profit taking before the end of the year, this is expected, right? So not only did we have that, but, and sorry for the scrolling here, we also, S&P 500 also hit a record high on December 24th as well. So again, it pays to own assets, point blank, period. When we go into this past week, before we go to week 89, we always go to week 88. So week 88 saw us with a balance of $3,748.82, money weighted rate of return of 18.21%, dividends earned of $33.83, and a market gain of $415.15. Now, this week, what are we at? Let's take a look here. So this week we have a balance of $3,845.55, money weighted rate of return year to date of 18.94%, so almost 19% year to date. Dividends earned of $33.83, and market gain of $436.05. So honestly, this whole chart, our chart from January, say January 2nd, or December, we can go back to December 31st, 2024 until now, has been up and to the right. So not mad at almost 19% year-to-date gains for our family portfolio. This has been fantastic. What has gone on? Well, this was also a deposit week as well. So what actually happened? Okay, so from last week and this week, from last week we had a, let's see, so from last week to this week we had here. So we started here from last week. So we had a dividend from Waste Management of 30 cents. Okay, so this was in my portfolio because I hold Waste Management. And then we were blessed with a couple deposits. Okay, so we had a $50 deposit, and then we had our $25 deposit. Our $25 deposit is our normal deposit that we typically put into the markets every other week, so bi-weekly. This extra deposit, we were blessed with another payment, so we just put some more money into the markets there. So with that $75 and change, if you will, we did buy a little bit of everything here. So we bought some Sony, Microsoft, Amazon, Apple, Xbox, Starbucks, Costco, and then McDonald's here. And again, one of the common things with stock investing, people always tend to forget, is you don't need to buy the whole share of the stocks. You can just buy fractional shares and build up your position over time. But at least you're having money in the markets, and it can compound as such. So M1 Finance does a great job with that because, again, you don't have to buy the whole pie. You can just buy little sections of the pie here. Okay, so that's what we bought. And then we also had some dividend activity on the 26th of 20 cents for Domino's Pizza. Now, if you're looking at these 20 cents, 30 cents again, and you're scoffing at these numbers, I get it. It's only a quarter and some change here and there. But again, with dividend investing, you have to look at the actual position that you have, right? These companies aren't going to pay you tons of money to hold their company, and you only have, several $100s or $1,000 into their company. You have to be a big stakeholder, and you have to hold a lot of their company to generate a lot of income or dividends from that. And also, this is a marathon, not a sprint. You have to have patience, and that's spelled with a P-A-Y. Patience in this investing game, especially dividend investing. It requires a lot of patience, and that's why you have to do your research when you're investing in these companies. These aren't fly-by-the-night companies. These are companies that have long lasted the hands of time, if you will, and have a great financial track record as well. So just something to preach on. I do always get on my soapbox with that because, again, investing and trading are two different things, and you have to have two different mindsets as well when you're in them. Okay, but as always, let's go bottom to top and let's see what's going on within our portfolio. So the bottom, unfortunately, is our middle, but our middle stocks have generated tremendous ground here. Our middle is up over almost 13% at 12.95% money weighted rate of return. The balance is finally cracked 500. So everybody is over $500 in their balance. Love to see that. So $512.40 is the balance. Just look here. This time last year, $161.45. That's where we were at, right? That's a huge growth in 1 year. Okay, market gain $34.74. Dividends earned of $4.16. And again, it's literally just continuously putting money in the markets and letting the markets do what it does. Okay, this amount Our lowest balance in our portfolio, in the family portfolio, is our middle stock. Our middle has the lowest balance out of anybody, but they have also generated a percentage that you can't get in a standard savings account or checking account for that matter. No bank account is giving you a 12.95% rate of return on anything. Okay. I mean, right now the internet banks, I believe they're at about 3 to 3.5% APY. Nobody's giving you the 12.95%. So again, just something to keep in mind here, because some people are very nervous about putting money in the markets and not risking, and I get it. You want to put the money in that you don't really mind losing, but again, you have to do the research on your stocks as well. So bottom to top, let's look at our middles portfolio. Sony has been probably the best performing asset, up over 9% year to date. Starbucks down over 5%. Tesla has maintained and gained ground, up over 45%. Google up over 100%. Amazon turning the waves here, as I mentioned, up over 10%. Costco down over 10%. I believe next year is going to be Costco's year. I truly believe next year, watch out for Costco. It's going to surprise people and it's going to melt faces. I promise you. Target, I think Target's also going to have a return to glory next year as well. We will see, down over 7% on Target. Let's go to our youngest. Our youngest stocks balance of $546.57, up over 16.44% year to date. Money weighted rate of return, market gain of $51.23. Dividends earned of $2.51. Tesla, very similar to our middle, up over 40% on Tesla. Starbucks, down over 4%. Costco down over 6%. We've already talked on those. Sony up over 14% and Apple up over 23%. There's really nothing I would do with these stocks for our youngest and our middle. These are just good companies. Some of the companies that have rough roads this year, Target being one of them, Starbucks being another, but I wouldn't necessarily jump the gun on those yet. We're going to wait and see what's going on. Let's go to my wife's stocks, if you will. Year to date, we have a balance of $562.30. Money weighted rate of return of over 50% at 54.34%. Tremendous. Dividends earned of $3.85. Market gain of $132.49. Now, just because I told you, or remember when I mentioned that our middle had a the return of 12.95%, and no bank's going to give you that rate. No bank's going to give you 54.34% as well. So that's why the markets, like the stock markets, crypto, it's crazy good. Trust me, when it's bad, it can be bad, but when it's good, it is on point. But my wife's percentage is the best percentage on anybody in our family portfolio year to date, and the reason being that just pick the right stocks. And again, these are well-standing companies. Google up over 100%. Nobody's touching Google, right? Nobody is touching Google from a business perspective, financial perspective. They're in the AI game now. They are the complete package, if you will. Pepsi up over 5% on Pepsi. Again, Pepsi is a little bit of, it's one of those sleepers, right? Pepsi, I believe, is a very good anchor for a portfolio. It's a dividend generating company, so you can generate some income with Pepsi, and it is long standing. Me personally, I like Coca-Cola better, but Pepsi is still a good choice. Tesla up over 50% on Tesla. With Tesla and SpaceX's IPO, expect Tesla to do even better than this year. Again, not financial advice. Celsius generated year to date for 71.25% for my wife. Celsius is crazy, and Celsius and Pepsi do go together, which is even more hilarious. But Celsius, again, I think Celsius is a good company right now. If I looked at their price is in a weekly level right now. I think they may dip a little bit more. You may see a little bit more dip from Celsius, but again, the rebound is just going to be fantastic with Celsius. And then Microsoft, we're just starting my wife's position on Microsoft, so watch out for this. You got Microsoft and Google both together. You can't lose with that combination. And these are companies, again, they're not going anywhere. Microsoft's been around in the game for decades. Nothing's happening with Microsoft. Let's go to our oldest. Our oldest has a balance of $1,105.32. Money weighted rate of return year to date 12.09%. Market gain of $92.49. Dividends earned of $6.91. And again, simplistic portfolio. Apple up over 17% on Apple. Costco, we're down, but keep an eye on Costco. McDonald's up over 10% on McDonald's. Again, one of McDonald's is just like Pepsi, one of those like very boring companies that have been around for more than 5 decades, and it is a dividend generating company as well. But again, it's withstood the hands of time. And then Tesla, as we talked about before, up over 25% on Tesla year to date. Last but not least, my stocks. My stocks also have done pretty well here this year. My balance is $1,118.96. Money weighted rate of return year to date of 18.2%, or 18.20%, I should say. Dividends earned of $16.40. Market gain of $125.10. Technology has driven the gains, but pharmaceutical is a close second. Pharmaceutical, we were just holding AbbVie. AbbVie has been the darling of my portfolio this whole year. Very good holding of mine here. Restaurants and food has gained some ground, up over 5%, at 6.12%. Consumer and staples, these have hit the blow, and consumer staples are Costco and Lowe's. We talked about Costco's here. Lowe's have gained some traction, but Costco hasn't, and that's completely fine in my book. I will buy discounted Costco all day long and twice on Sunday. I will, just because I believe in Costco. It's a fantastic company. Nothing is beating that $1.50 hot dog and soda combo, if you know what I'm saying. If you know, you know. Real estate, Old Realty Company, 0.65%. Industrials and energy, which is waste management. We just received that dividend payment. And then Cintas. Cintas is doing some acquiring. They may be acquiring UniFirst. So again, this is also one of those companies that's long-standing, but still making money moves. So it's really hard to lose with them. And then we have our finance sector, which is just Visa and Moody's, both dividend compounders here. And Visa's just mentioning that they have one of the best quarters of all. And not only that, we just got news from this holiday season that Americans are spending the most money they've ever spent. So guess who that's benefiting? Visa, MasterCard, and American Express. Why? Because people really don't have that money anymore, so they're putting it all on credit cards, right? And guess who supplies those credit cards? That's all I'm saying. And then technology, as we talked about, Microsoft, Google, that's what I hold as well. You can't beat them. Microsoft down a little bit less than 1%, but I'm not worried about it. I'll keep buying Microsoft all day long. But all in all, just a fantastic year for the family portfolio. 18.94%. Obviously, if you're on Twitter, if you're on Reddit, for instance, you'll see a lot of gains that are above 20%, above 25%, 30%. Oh my goodness, I'm generating all this. And that's fine, right? Me personally, I'll take a consistent 15 to 20% all day long. A consistent 15-20% I can generate year over year, which it'll be very hard and I probably won't. But if I can get somewhere around there, I'm okay with that versus having the big swings and the big lows. And I'm very, very proud of our family portfolio, really am, in the year that it's had. So I hope these videos help you guys, provide you with the motivation and the confidence to keep investing. Even if you're investing little small amounts, these generational steps can happen. I mean, again, as I mentioned, let's look at 1 year ago. 1 year ago, this date, we were at $1,638.18. Fast forward, $3,845.55. So again, it's more about the repetitive nature of investing consistently and not really worrying about it. And that's why I said, if you can take your head out of the game, research the companies you want to research, be confident in their mission, be confident in their financial status, and be confident in putting your money in there and then going to sleep at night, you'll be completely fine. It's when you're worrying about the money and maybe you shouldn't have been put money in there. You should have put the money towards a mortgage or a rent payment or groceries or anything like that. That's when you start worrying about trading, and that's when you get into that keyword trading instead of investing. But again, let me get off the soapbox, guys. If this was helpful for you, it's again Family Portfolio Week 89, last recording of 2025. The next one will be in 2026. We have balance of $3,845.55. Money weighted rate of return year to date of 18.94%. If these videos are helpful, guys, feel free to like, subscribe, comment, reshare. Let me know what you're investing in. And as always, thank you and happy investing, guys.